What's up, investors? It's the Russian dude, and well, it finally happened. Almost for the very first time, there is a rare public disagreement between two of the most influential figures of Putin's inner circle. The head of the Central Bank of Russia, Elvira Nabiullina, and Sergei Chemezov, CEO of state-owned military-related conglomerate called Rostech. The tensions surely rise, and during their verbal battle, Elvira Nabiullina allowed herself something, what not too many people before her were even able to think about it. She, not so directly, but openly, criticized Putin and his invasion of Ukraine, blaming him for the economic disaster Russia is heading towards. The main argument that Elvira Nabiullina and Sergei Chemezov were having was about the possibility of stagflation, and while both leaders agree on the grim outlook, they diverge sharply on its causes and who is to blame. Nabiullina once again blames Putin. And I mean, she is the head of the Central Bank of Russia, a very smart economist, financier, and she knows a thing or two when it comes to money and economy. We spoke about it earlier this week that she was already trying to give unambiguous signs to Putin that his war is leading Russia towards a financial catastrophe, but it looks like that the president was not able to fully grasp the seriousness of the situation. Or maybe he did not want to publicly acknowledge it. In one way or another, Nabiullina decided to press forward and just speak her heart out. Whatever happens next, doesn't matter. Because she knows that if the Russian economy collapses, she will be the one to be blamed and take 110% responsibility, most likely against her will. So it looks like that she thought it doesn't hurt to try and change the inevitable before it happens. To fully grasp the gravity of these warnings, we must explore the nature of stagflation, revisit historical instances like the United States in the 1970s, and examine the current indicators suggesting that Russia may be facing a similar economic disaster. Elvira Nabiullina and Sergei Chemezov represent two pivotal perspectives on Russia's economic challenge. As the head of the Central Bank of Russia, Nabiullina has implemented conservative monetary policies, including raising the interest rate to 21%, aiming to slow down the inflation and stabilize the national currency ruble. Chemezov, the CEO of Rostech, a massive state-owned corporation with significant interest in defense and technology, most of them military-related, and one of the best friends of Putin, criticizes these policies. He states that the high interest rates hurt the industries, especially those involved in heavy manufacturing and military production. I mean, high interest rates are the price you have to pay for printing so much money, pouring into military, trying to sustain the invasion. So the very last person who can complain is Chemezov himself, the direct benefactor and receiver of billions of rubles literally inside of his pocket as a result of this war. And guess whose side Putin is going to take? Some banker, even if she is the banker of Russia, or his best friend and the arms warlord? I guess the answer here is pretty obvious. Chemezov provocatively suggests that only illegal businesses could afford to operate under such financial conditions, warning that these policies could accelerate the collapse of vital industries and lead to mass unemployment. He argues that the labor shortage could swiftly turn into widespread joblessness if the current monetary policy persists. Nabiullina counters by asserting that the real issue lies in unchecked government spending, which has artificially inflated demand without corresponding supply, paying hundreds of thousands of rubles to tank factory workers, and later losing this tank in Ukraine creates zero social or economic value inside Russia, and yet these are the only industries which still prosper under Putin's rule. She believes that industries and jobs which are kept alive by this artificial demand are unsustainable and will inevitably disappear, not because of the central bank's policies, but due to structural imbalances created by excessive fiscal stimulus. She is simply referring to the basics of the economics. You cannot tip the scale in one direction and expect it to keep the balance all by itself. Their disagreement centers on the root cause of the impending crisis. Chemezov blames restrictive monetary policy for stifling the economic growth, while Nabiullina points to excessive government spending as the main reason behind inflation and unsustainable demand. By making these claims, Nabiullina directly blames Putin's war for Russia's economic hardships. She obviously does not use the exact words, but it does not take a genius to understand who she refers to in her speeches. and despite their differences, both acknowledge that stagflation possesses a significant threat to Russia's economy. Stagflation is a particularly troubling economic condition because it combines two undesirable elements: the absence of economic growth and high inflation. Traditionally, these two phenomena were considered mutually exclusive, making stagflation an unusual and a very challenging problem to solve. The United States experienced such a scenario in the 1970s, providing a historical example of stagflation's destructive potential. Guys, I decided to use the US in this example because according to my analytics, most of you guys are watching from the States, so it will be a little bit easier for you to understand these economic complexities, since some of you probably even experienced a similar event in your own history, and so you will be able to draw the analogies. So yeah, after the Second World War, the US enjoyed unparalleled economic dominance with industries thriving, while European and Asian competitors were rebuilding from wartime devastation. By the late 1960s, however, this advantage began to disappear as other nations recovered and re-entered global markets. American industries faced increased competition, leading to a natural decline in sectors like steel and automotive manufacturing. The situation worsened with the 1973 oil crisis. The Yom Kippur War prompted the Organization of Petroleum Exporting Countries, or OPEC, to impose an oil embargo on nations supporting Israel, drastically reducing oil supplies and causing prices to quadruple. This energy shock rippled through the economy, raising production and transportation costs, which elevated consumer prices across the board. At the same time, the conclusion of the Vietnam War resulted in a significant reduction in government spending, particularly in defense-related industries. Companies supplying goods and services for the war effort suddenly faced a sharp drop in demand, leading to layoffs and closures. Emerging economies, notably Japan and Taiwan, introduced new competition in sectors once dominated by American companies. Japanese automobiles and electronics gained popularity for their quality and affordability, eroding US market share. These factors led to high unemployment, soaring inflation, and negligible growth. Policymakers found traditional tools ineffective. Measures to slow down the inflation further suppressed economic activity, while efforts to stimulate growth made the inflation even worse. The social impact was significant, with rising crime rates and declining public confidence. Recovery required structural economic changes and was not achieved quickly. But then came the 80s, and the situation started to get better. And probably that's why one of the reasons why so many people think of the 80s as the best time of their lives, it is because America was finally regaining its confidence and swag. And so now we are back to Russia, which without a doubt started to show very serious first signs of stagflation. The most noticeable one is the Russia's housing market, which sends distress signals, typical of an economy heading towards stagflation. The housing sector is crucial because it is closely linked to numerous industries involved in constructing a house, and so it serves as a significant driver of economic activity. Government policies have artificially boosted the market through subsidies and preferential mortgage rates for certain groups, obviously, such as military personnel and large families. This led to inflated property prices and increased construction activity, creating an illusion of economic strength. Which makes sense. If a soldier receives millions of rubles just for signing a military contract, he is not going to need all this money in Ukraine. So obviously the ones who are going to spend it is his family. And pretty frequently they end up buying a new apartment or house. The real estate developers see it and they subsequently increase the prices. This is just basic economics 101. If the demand exceeds the supply, the price goes up until both are even once again. The next thing they start doing is building more homes, because they think that the flow of soldiers' families will never stop, at least not in the near future. So they want to sell as many homes as possible. As a result, the average house or apartment price skyrockets, and this, in return, greatly contributes towards the inflation. That's exactly why the Central Bank of Russia decided to raise interest rates, which has made borrowing more expensive, directly affecting mortgage affordability. The reduction or elimination of government subsidies further diminishes demand. Potential home buyers facing economic uncertainty and higher costs are postponing or even abandoning property purchases. This decline impacts not just the housing sector but also industries linked to construction, such as raw materials, manufacturing and services. Fewer homes built means fewer jobs for electricians, plumbers, painters, carpenters, flooring appliances, windows, carpets, sellers, whoever. That is precisely why the housing sector serves as the main sector to watch out for during the earliest stages of an economic unrest in any country. The contraction exposes vulnerabilities in the economy that were previously masked by the government intervention. As demand falls, property prices may drop, potentially leading to a market correction. The once booming construction industry faces a potential downturn, which could trigger a domino effect throughout the economy. At the heart of Russia's economic challenges is an over-reliance on unsustainable government spending, particularly in sectors that do not contribute to long-term growth. Extensive investment in military expenditures has created an artificial economy. Workers are employed producing military equipment that does not generate lasting value. This artificial stimulation has distorted the economic landscape. High salaries in war-related industries increase consumers' demand, amplified by government-subsidized programs like preferential mortgages. While these factors contribute to GDP growth on paper, they do not reflect genuine economic health. What's even worse, huge influence of the military sector over any other parts of the Russia's budget dwarfs any other sector of the economy, making them less competitive and interesting for potential employees. People simply no longer want to work in healthy and peaceful industries, even IT, like things that are always preferable for people. Creating something useful, when you can just simply repetitively twist some screws inside drones and get paid 5 times your normal salary. This has a devastating long-term effect on the future of the Russian economy. Wartime economy, which is essentially what Russia is right now, can only survive during the time of war. And the longer the war economy exists, the harder and more destructive it will be to get away from it. As fiscal constraints emerge, the artificial support for these industries diminishes. Traditional monetary policies are proving ineffective. Despite interest rate hikes, inflation persists, and the ruble weakens. This ineffectiveness indicates that the economy is no longer responsive to standard interventions, which is yet another huge sign of an upcoming stagflation. The loss of human capital due to a conflict reduces the labor force and destroys productive capacity. External factors, such as international sanctions and reduced access to global markets, further strains the economy. The combination of high inflation, stagnant growth, and ineffective policies suggests that Russia is heading towards a severe economic crisis with no easy solutions. Elvira Nabiullina saw it coming a long time ago. She tried to warn Putin and his administration many times, but she also knows that she lives in a country where bad news are not allowed to be delivered to the superiors. She does seem genuinely trying to save the Russian economy by acting normal in the country of Putin where nothing is normal. She started by trying to give Putin the slightest hints, and now she indirectly but openly confronts him, blaming his invasion for the upcoming and most likely inevitable economic hardships. But the question remains the same. Will Putin listen to her, accept the bad news, and try to change the situation for better? Or will he, as usual, prefer to take the side of his friends, who tell him that everything is normal and there is nothing to worry about? Because as soon as bad news and bad times do arrive, they will always be able to find a person to blame. Elvira Nabiullina, for example. Well, there you have it, guys. Thank you so much for watching. If you enjoyed today's episode, please like this video, subscribe to my channel for more videos like this. If you wish to support my work, there are links down below. I continue uploading hundreds of uncensored Russian-Ukrainian war footage to my Patreon every single day. So the links once again are down below. Enjoy your weekends and see you on Tuesday.
We won't succumb to their tricks, the facade they try to sell, their twisted words and feeble claims on us all they